GM friends, and welcome to the Future of Gaming. This is our weekly Town Square. We're recording this where I am on Wednesday the 18th. We have a great crew here, and others might join us, and these are a bit of the ideas of the things that we want to talk about. The future of personal finance. I just had a short discussion about this, and I want to pitch you my vision of this. It's not really related to games, but I actually think it might become related to games at some point. I need some help solving today's Picturdle because it's really hard. Kiefer is going to tell us what a token is, and then we're also going to have a discussion about value accrual in Web3 games. It's all very finance related. If there's any other suggestions, feel free to share and let me know. I don't know how to, because I can't read this and type this and then like listen. So I don't know how we would do this. We'll figure it out. Good. All right. So future of personal finance. My vision there. So I think the current, and I think a lot of people agree, the current financial system is very outdated, right? If you look at how banks work, if you look at how stock exchanges work, it's built on mainframes and software that was written in the 1960s and 70s, and it needs an upgrade. I gave the example that, I live in Belgium. If I want to have a stock, like if I want to buy shares of a company, I need to make an account with a broker. There's one decent broker in Belgium. There's one decent broker in the Netherlands, which makes it that I have pretty much two options. If I choose a broker outside of Belgium, I have to be concerned that, they might not do all my taxes for me or file like tax reports for dividends and shit. And so it's all pretty big mess. And so I believe that we're moving towards a tokenized future, which means that all financial assets will be tokenized. They will be on the blockchain, and anyone can build a interface to interact with these assets. And anyone, will be able to have access to all of the assets that exist in the world. And everyone will be able to build a solution software that will automate, income statements for everyone living in X country, for example. And I believe that's what we're moving towards. I also believe that transaction costs will converge towards zero. So as we move forward, the costs of transacting, of making an exchange between, let's say, dollars and Apple stock, or dollars and a ETF that covers let's say the Standard & Poor, is going to converge towards zero. And so the future of personal finance is, I think that every person will have a personal... That's a bad idea. I'm not going to write and speak at the same time. It's going to be awkward. Anyway, so a personal asset allocation. So for me, for example, it's going to be like 20% Bitcoin. It's going to be 20% ETH. It's going to be 20% the global stock markets, and then 40% maybe, something else. I don't know. And every time I make a transaction, so let's say that, I'm doing a transaction with Matt, right? Matt's here. I went for beers with Matt. Matt's paid, and I still owe him $10. So I have my personal asset allocation, my global asset allocation, which I just described. So you have like 20% Bitcoin, 20% ETH, etc. And Matt has his personal asset allocation, which could be, maybe he's very conservative. He's going to have 40% bonds, 40% global stock markets, 10% Bitcoin, 10% ETH, to give an example, right? If I'm going to pay him $10, I'm going to pay him $10, and there's going to be a proportional amount taken away from all of my different assets that I have in my global asset allocation. So there's going to be like $2 worth of Bitcoin, $2 worth of ETH, et cetera, and that's going to be sent to Matt. And Matt is going to have like a receive assets from me, and that's going to be also proportionally divided back to his global asset allocation. And I forgot, it was like 40%, whatever. And so we will move towards a future where it doesn't matter what asset you have, you will be able to pay with whatever asset. And everyone will have their global asset allocation, and there will be no need for a currency of transaction, because everything could potentially be a currency of transaction. And the actual currency that's used to transact between the two individuals doesn't even matter, because all they care about is what they end up with, which is going to be their global, the way they have their global asset allocation. I probably could have done a better job describing that, but that's the vision. Any thoughts or questions? Maybe I missed something.
I have a question.
Yep.
In the example that you're giving, what would then be the common denominator, right? So if you right now you say I'm buying him a beer which costs etc. $10, so you're still using the dollar as a common denominator. But when nobody's trading in dollar anymore, how do you still decide in which currency something is priced and valued at, and how does that correlate to the other assets that you have?
That's a really good question. I think we will converge upon probably one. Actually, it could be dollars because we're used to using dollars. But there's going to be one asset that we all use. And it wouldn't surprise me if that asset is related to Bitcoin in some way, because as far as I know, there's like Bitcoin is the hardest asset that there is, and the asset that is least likely to inflate and change its value proportional to real goods over time. And so we're gonna converge upon an asset that we use to decide or to quantify prices in or value in. But we won't even need to hold that asset, so we can use whatever asset we want, but we don't have to hold it because the transfer of value is going to be automated and can happen from any asset to any asset.
I'm just wondering that. Imagine then if Bitcoin is the common denominator in which we price things. Bitcoin, I think by design, is a deflationary asset, and that will only increasingly become so over time as more people come into the network. Imagine some of those other assets that I have are more inflationary, right? Imagine that I have some stock that is inflationary because new stocks get printed. Doesn't it make more sense for me to pay with common goods with inflationary assets rather than a deflationary asset like Bitcoin?
Well, if you think about, let's say in a hypothetical scenario, you have 50% Bitcoin and 50% one stock. Bitcoin is deflationary and the stock is inflationary, right? And you're saying that you would rather pay in the inflationary stock instead of in half Bitcoin and half the inflationary stock. Is that correct?
Yeah, I mean that seems to make most sense to me, I guess.
I agree. But so once you do that, the percentage of, so let's say that you pay 5% of your net worth in the scenario where you only pay with your with the inflationary stock, then you're going to have your asset allocation post that transaction will be 55%. Let's skip the math and just use simple numbers. 55% Bitcoin and 45% that liquid stock. Let's say Apple stock, right? Bitcoin and Apple stock, just to make things simple. And let's assume that Apple is potentially inflationary or is inflationary. And so you're saying I'd rather pay with Apple stock because Bitcoin is deflationary, Apple stock is inflationary. So I prefer to pay in Apple stock, correct?
Yeah, that makes sense.
So, right, and now we're at 55% Bitcoin and 45% Apple stock. If you continue that, then at the end, you are at 100% Bitcoin and 0% Apple stock because you just spent all of your Apple stock by paying with it, because that's the unit that you use to pay with.
Yeah, I get what you mean when you explain it logically. I think what I'm struggling with is that when I think of a medium of exchange currency, something that I use to buy things, I would want that to be stable and to be between certain price bounds so that I know that I'm not speculating on the asset that I'm using to buy my common goods. That's kind of the big argument that a lot of people have against Bitcoin being a medium of exchange, is that by nature it's deflationary, it appreciates in value. So why would I want to spend something now if I'm better off holding it and letting it appreciate in value? So I'm wondering in the model that you're explaining whether it's going to be able to align all of the incentives of different currency needs, and whether people who own stocks with the idea of that wanting to appreciate will also be willing to spend that stocks as a liquid good, if you know what I mean.
Yeah, this is very much tying to what I wanted to chat about. And so I think what this means is that this is going to change people's allocation preferences to kind of tie these thoughts together. And so that generally people do want to be kind of spending and holding an asset that is stable. And so people with that preference, maybe it means that their allocation is like 80% dollars or Apple stock, and then 20% Bitcoin. And so their focus is less on kind of the long-term spending and more on stability, as different users are going to have different sort of risk preferences about how they want to be structuring their portfolio.
I would add on that is that for me, it's a really good point that you make, Jojo. And I think we're going to stop thinking about what money I use to pay, and we're always going to be thinking about what is my global asset allocation, because that's the only thing that matters in the end. Because in your hypothetical scenario, you will always be paying with the assets that you don't want to have, and the reality is that then you won't have that asset. So you will always want to converge towards a asset allocation that is optimal for you, and that asset allocation will be purely based on the assets that you think that will retain value moving forward. And so there a very conservative asset allocation might be maybe partially Bitcoin, partially physical gold, but maybe a large chunk of the global stock markets and all of the companies in existence, because those are the ones that are actually creating value, and so you can expect that to retain its value over time. And my point is that you will never have to think about what do I use as my medium of exchange, because it's irrelevant, because you will always be able to pay from all of your assets simultaneously. And the only question that you will have to decide on is going to be what is going to be my ideal personal asset allocation at all times, because you will be able to keep it at all times. And, depending on what you're exposed to. So let's say if you have Bitcoin and Bitcoin crashes for some reason, that will have an impact on your global net worth, if that makes sense.
Does this change if we're talking about payments that are happening today versus payments that are happening at some time in the future? Because a decent amount of kind of economic interactions are not ones where there's immediate payment, right? If we have different thoughts about how the value of a certain asset is going to change in the future and different risk preferences, then it might shift towards I want to be paid or we might disagree about what we want to be paid in if we're being paid now versus being paid sometime in the future. And I don't necessarily have like a super clear thought on how that might look at and interact with your thesis, but kind of interested in your thoughts on if that changes at all if we're talking about future transactions.
I think it's a good question. But again, I think through technology, like today, you're right that there's a difference between the moment of payments and the actual settlement. And so this actually leads to a lot of friction and a lot of transaction fees that are like unnecessary. Ironically, I used to work in the payment industry, so I have like firsthand experience with this. If you make a credit card payment, there is a risk that like after you make the credit card payments, that you tell your credit card provider that you don't want that payment to go through. And that risk is a risk generally that your credit card provider takes. And because of that risk, they charge pretty high fees on every transaction. I think that Visa and MasterCard charge like 2% on average, which, starts counting up. And these charges, by the way, are paid by a merchant. So if you pay a merchant $100 and you pay with a credit card, they only receive $98, which is quite significant if you look at the margins of some of the brick and mortar stores that you pay at, or even on the internet. And so there is currently there's a difference between like the payment time and the settlement time, or the moment that the value is actually transacted, or changes hands. So I think in the future, one of the great things about blockchain is that you have instant finality, which means that the moment the transaction gets confirmed on chain, which, again, moving forward or in the future will be instantly, like there's no way for me to contest that transaction, which obviously has its drawbacks, but let's put those aside for a bit. And so that means that there's actually no timing risk anymore. And so the friction and the cost will be lower. If at some points, we want to have like a timing difference, I think those will be completely separated from transactions. And so meaning, Kiefer, that in your example, if I want to do a payment with you, but I only want to be paid, or I only want to pay you in a month in whatever assets, like you and I don't even have to agree on anything, because the transaction itself, the exchange of value in itself, and the option contract, which is essentially what we're talking about when we're talking about something that happens in the future, are going to be separate things. And so, we can do, like, I can do the combination of a payment plus a option transaction with a third party and mimic the, oh, you're going to pay me this asset in a month. Does that make sense?
Yeah, and then you would pay a fee for that service.
Sorry, Jojo?
Would you then, in that example you gave, you would pay a fee to the middleman for providing that delayed payment service?
Well, it's not going to be a delayed payment service. It's going to be like you're going to pay a fee on an option contract, right? Like whenever you have an option, you pay for an option. And so exactly, there will be a very granular distinction between, transactions and time and optionality. And all of these will be very separated, and you will be able to opt in whichever one you want.
One of the components of a currency is being a unit of account that people can use to compare different assets and also make decisions at different points of time. So, but I see what you're saying about in terms of making this kind of like a structured financial product with different parts. Like you could have, say, dollars as the base currency, saying that at 1 month in the future, I want to be paid $100. But then building on top of that, you just need to kind of add in and kind of abstract this with some financial contracts that will adjust based on what the sender wants to, the currency the sender will want to pay in based on their allocations to cover any price changes in those assets in the coming months, and the receiver, and then doing kind of the same for the receiver. So I think you still kind of need an underlying reference currency like dollars, but then you could build those that kind of suite of financial products on top of it to achieve those results.
Yeah, I agree. And so for me, I think it would not surprise me, or I think in an optimal scenario, no, I'm not sure about that, but I think there's a good chance that the optimal currency to use as the unit of account is going to be Bitcoin related. That's one of my wild hypotheses that I'm sure a lot of TradFi people vehemently disagree with.
Yeah, because in that statement you just made, it would mean that governments around the world lose all power related to having their own native currencies, and Forex as a whole market would just cease to exist. Is that what you're saying?
Correct. So it depends on what you mean with Forex. But yes, I think this will mean that. So I think a hybrid version of this might be that there's still going to be national currencies, but in order for those to actually make sense, countries will have to enforce the usage of their own currencies that they issue, and maybe enforce the holding of their currencies that they issue to both individuals and companies. So actually, I haven't thought about it, but it actually could make sense that if you want to be a part of the United States, your asset allocation needs to have at minimum 10% US dollars that they issued.
Yeah, because I would imagine, governments, they're not going to be very happy about this because, currency is a huge form of control. So if a country says like, hey, if you live in this country, you have to pay your taxes in the native currency, you have to do your commerce, in the native currency, etc. That still implies that a huge amount of traffic needs to occur in the native currency, which means that it will still have massive market dominance to a certain degree.
Yep. I think the interesting thing is in that future world, if I have to take let's say I have to pay my taxes in euro, I can have my global asset allocation in everything but euro, but still pay my taxes in euro without any problem, right? Because it's just for my global asset allocation, each part gets sold a bit into euro, and that gets sent towards the government. But yeah, I agree. I think moving forward, governments will have less and less power with their currencies. Again, if my prediction comes true, I think my prediction comes through if it's not regulated to death. And so I think that's the biggest risk for this to come true.
Yeah, I would be more worried about the we're seeing like the ECB, for example, coming out with their own digital euro coin.
Mhm.
I would imagine that as soon as that takes any foothold, they start pushing that narrative down our throats, because once again, they have the power to do so, right? I think that would be a good contender for becoming a dominant currency for certain regions. And yeah, regulation around crypto is still very much up for debate to see how effective that would be.
Yeah, I agree. Yeah, let's see. Sorry, we just spent 24 minutes talking about personal finance and not games, so apologies for that. There's one person that joined that I want to highlight, and I think he knows that I'm going to call him out. Jasper, are you in a space and mindset to talk? Maybe not. Sick in bed. Okay, get better, man. So Jasper is just lurking and listening. It's good to have you anyway. And I saw that Tim also joined.
Hi, guys.
Tim, you're making my life hard, at least today, because I tried to do the Picturdle and I'm struggling.
Oh, no.
So I wanted to do it today, and then I can also while we're doing it. Okay, so did anyone do or find today's Picturdle? Let me open it.
I'm gonna watch this.
Okay.
Oh, the mean one. Yeah, this one was mean.
Very mean. So did anyone find it? No one? Okay. Did anyone?
I got 3 of the 4.
You got 3 of the 4, Matt. Okay.
That's right. Yeah.
Okay, so if no one found it, okay, no spoilers, says Jasper. I wanted to solve it together, like a play session.
I'll do it.
So first of all, Tim, I'm going to tell you this. I want to be able to click on these and have it big, because like what the hell am I supposed to see here? What is this?
Okay. So I'm gonna do it. We're gonna make it so when you click one, it does a full screen size, so that you can just see what's happening. We already did the view all 4 at once for mobile, because that's really useful. If you go to the top left corner and click it, it just brings it all into one little image like that, and that allows you to quick compare. But I like the idea of being able to click one and then boom, it's full size. Great.
Did you consider having, because it kind of takes away from the fun to have to like fill in 6, because maybe I want to be like, oh, I'm going to be smart. I have no idea what this, well, let's say this one is. And I want to fill in like maybe I only get 4 letters, but I want to fill in like A and an E and like a bunch of like common letters, so that can help me then find the next one.
Thought about it. We kind of went back and forth on this in the game design phase, right? Me and the partners, because it turns out the constraint to forcing you to think in dictionary words does give it a little bit more of an addictive quality, right? When you can just sandblast it with random letters, it kind of starts to lose its thinking. One very valid strategy, though, right? Very valid strategy is to just abandon the idea and just use another word.
Yeah, so that was what I was going to suggest. So you don't you can't put random letters, so it has to be in the dictionary, but you can Anyways, that was the idea. And then, one part is like you could have like an extra color that says, oh, you got the right amount of letters. And it's
okay. I like what you're thinking there. I like that.
Anyway, so for example, here you would have like, I don't know how you would visually do it, but you didn't know that there's 4. And so you type in 5 because, like if, for example, here, you know what I would have done? I would have put cloud, like, because there's a cloud here, there's a cloud there. And then, this, I could see this being in the cloud. So I would have put the cloud, and then it would say, no, it's actually not 5 letters.
Yeah. So that's a good thought. The one thing that we're having a problem with when thinking about having it have dynamic entry size is that I did build this with the team to be completely localizable, right? So it can actually handle different character codes than just American English letters, right? So in the future, when we're doing Korean and Chinese, suddenly there is a different keyboard input there where that same philosophy doesn't necessarily make sense, right? But I do think as we move forward and we move towards more of a ask for help hint system, that we're going to like approach things like, hey, you put in wind there. That should trigger on a hint that says, hey, by the way, you're on the right track. It's just a different word related to that. You know what I mean? Yeah. I like that idea of dynamic entry, though. It's just we got to figure out how that works with other languages.
Yeah. It feels I'll leave that up to you. That's one point of
Yeah.
feedback. Anyone that hasn't played this, so Matt, I'm going to exclude you. If you don't know the answer, give me a guess for these because I have no idea, honestly. Like, I'm blanking. Like, in only
Try
one letter.
silk on the right.
Silk. Actually, that's a good one. That's a good one.
How about middle?
This one.
Ooh.
And I'm thinking color for the third one with an OU spelled the British way.
Okay. Middle was good. Man, I was thinking about this a lot because I knew it was.
We already had silk a few days ago.
Yeah, exactly. That's a good call. Right. So
what yellow letter means?
So, it means that the letter is in the word, but not in this
Ah,
location. So we know that
Alright.
O is in here. There's at least one O. There's at least one L, but just not here. And or the O is also not here. So the O is here, or there. Any other suggestions? We also know that there's an S in this word. Sheet, no. That's stupid. It can't start with an S. Any other suggestions? Throw it out there. Should I look at the chat? Is there a chat? Open chat.
Come on, let's do it.
Let's do it. Right one, silk. Yeah, no.
Maybe sail.
No, it can't start with an S, and it also doesn't have an
Oh.
I or an L. No, yeah,
Got
you get more tips than you realize, right? Actually, I could have known that color was wrong because the R wasn't in it, and yeah, so.
It's still a good way to get more letters. See, you've got 6 attempts, so drilling down like that's not bad.
Yes, but you also want to have the bronze medal now, right? So
Yep.
you want to be right, but it's
Yep.
like you want to think about, because it's also interesting if you know that it's 4, but you got the wrong
Yeah.
word, you might go for 6 so you can get more letters.
Yeah. So, and if you guys can't guess this one, and that's still fine, like if you were going to ask for a kind of hint, what kind of hint would you ask for? Maybe we can just do a hint system, like as a little game dev experience here.
Yeah.
I can be your AI
mean,
for a day.
A confirmed first letter would be nice.
Can we try the third one? Maybe it could be clouds.
It can't. Well, it can't be, right, because the C is here.
All right,
Yeah.
right.
Yeah. So that's. By the way, Tim, I think this letter should be yellow as well. Or is that
Okay.
Or is it only yellow if it's in there twice?
That's exactly right. It used to be the other way around, and it was too confusing for people. We actually constrained it so it shows you, hey, there is an O,
Yeah.
but there's not
Only
2
one.
O's.
Okay, interesting. That's good. That's good to know because it actually incentivizes you that it gives you a reason to use a word like color as a tester because then you have more information.
Yep.
Okay, good.
So I'm noticing like a platform or on 3 of them if we're
Yes.
thinking about solving the third one. So it's either on a table, it's on some sort of a platform,
Yeah.
the hanger sitting on top. So I'm just thinking out loud here.
Yeah, I like it. Keep going. Come on.
I was thinking maybe the third one could be lonely, but I'm not sure. It hits the letters, but I'm not sure if it does look lonely.
I don't think so because the O would have been green then.
Oh yeah, of course.
Yeah.
Do you guys want a style of hint?
Okay. I
All
don't
right.
even know what a style of hint means, but
Right.
give it to me.
So I'll say this. The third one is an adjective, and it's describing an attribute about the 3 other images, right? That one's an adjective. The last one's a noun. It's something that's it's not the verb of what's happening, but it is a noun describing, that situation.
Yeah. Okay, so in these, there's something happening, which, I want to say, it's reflecting, right? Like this looks like it's lying on a mirror. This is
Right.
also
Yep.
reflecting. What is?
A good
What
word for
about
some
gust
sort of
for
attribute.
the 4th one?
Sorry,
What about gust for the 4th one?
that's a really good one. Yeah. I can hear Tim's laugh. That's probably a good one. Okay, so I think we're close, right? So okay, Tim was already also hinting towards the whole reflection thing. So we want an adjective that is something with reflection, and it has an O and an L. We're using the cumulative brain power of how many are we here? 15 people. Dude, isn't this like a game dev's dream?
Yes, this is the perfect feedback group. You guys are so much fun with this. It's amazing.
Matt, did you find this one?
Writing down hint style ideas right now.
Yeah. So adjective.
If you want another hint for this, here's what I was thinking. Like one of the hint styles could be you could get a singular image, right? You know how these are all like having multiple things in them? This would be a singular image that shows off that hint, right? Yeah. That really shows it off. So if you were imagining this one, it would be a pair of lips with very bright red reflective makeup. What was that? Lipstick.
Glossy.
Lipstick, yeah. Oh
wait, say that again. I didn't hear it.
Glossy.
Glossy?
Yeah.
Is it this?
Yeah. Yeah, lipstick.
Oh my god, we made it. Oh my god, that was so hard.
The group did it. This was one of the harder ones. This was one of the hardest ones.
Yeah, man. Wow.
This is a fun game.
It is. It is
fun. And it was developed here at FOGDAO. We like kind of like we're testing it and playing with it as we went. It started out as a tech demo, and then now it's got like an AI background. It's crazy.
That's really fun. Is there any way you could hook this up to like an email so that every time there's a new one, I get an email about it to be at top of mind?
So glad you asked. It's literally on the to-do list this week.
Oh, nice.
All right. Today's Picturdle. Check. Done.
Nice.
That was fun.
Good job, guys. Ladies and gentlemen, well done. Thank you for your help.
We got him, ladies and gentlemen. We got him. All right. Next up. What is a token? Kiefer, this one is yours.
All right. Yeah, so we touched like a little bit on this before, but just kind of want to spread a little bit of awareness in thinking deeper about what a token means when designing this or when evaluating models for different games. And I think this might have been relevant to this is relevant to the discussion as well on value accrual, because I like to when talking about a token, I like to split that down into fundamentally what that asset is. And a common split there is if it's a token that's meant to accrue value, and in that sense have attributes that make it like equity, and generally the focus is on holding that asset with the expectation of the price going up. That's like a value accrual type of token versus a currency, something that's a medium of exchange. And this is what people are going to be trading within the economy. The goal is spending, not holding. And generally, it's very important that the price of that asset be stable. And so with this split, when phrased like this, it really shows that these are very opposite types of assets. And so it's a bit of a warning to be careful that when you're talking about tokens in a general sense, you can be talking about these very different type of assets, and that can lead to a lot of confusion in discussion because you might be talking about something different. And so there's been a lot of discussions recently about like what place do tokens have in Web3 games, and so you can kind of split this discussion apart into what place do medium of exchange tokens have and what place do value accrual tokens have. And so can maybe leave value accrual for a second here. That's another topic. But on the medium of exchange side, something that's broadly failed so far in Web3 is creating a medium of exchange that's actually stable. And so there's been a focus on like balancing out faucets and sinks. But if people don't really trust that the asset will remain stable, then they're not really going to want to use it. And so I draw an example of Second Life. And so for anyone that's not familiar, it's an OG metaverse. It's been around for 20 years. They currently have a $650 million GDP. And they're the best example I can give in terms of having well, Eve is also pretty good, but having a successful economy that can be used as a reference for how teams should think about designing a medium of exchange currencies. And they, we won't go super in depth on this, but use have a semi-stable currency system where essentially you're keeping the price of that asset within a particular range by creating a price ceiling, by selling more currency and creating a price floor through reserves. So I think that a lot more teams should consider having these semi-stable assets and based off of this reference for a successful metaverse currency from Second Life. So yeah, interested in hearing any other people's thoughts on this, or we could jump over to the value accrual discussion.
I think that token, it is different from project to project, right? I mean, the user case can be different. For instance, can be like a user acquisition tool. Someone else can use it as well as value accrual. I mean, at this point, I don't think that there are good example and bad example. It is very, at the end, it very depends on the project tokenomics. It depends about for who are you designing it to, because we know that there are a lot of stakeholders in Web3 project. You know, I think that basically there are two kind of drivers for the Web3 games, and one is the one that bring stakeholders that are interested in an economical value, and the other one is about the emotional value, right? So I think that tokens can be used for two kind of stakeholders. That's why I'm a fan of the dual token tokenomics, because actually you can use one token as a vehicle for the economic value, while the other token can be the vehicle for the emotional value.
What's an example of a game doing this, Antonio?
I mean, we are trying to find the good compensation between the different stakeholders and the different value. We don't think, as a crown chaser, we don't think that we have solved the issue yet, but we are doing a lot of projection and talking with different stakeholders. So we have investors from one side, players from the other side, even speculators, and so on. But yeah, I think that this is the future. We had, I mean, dual token tokenomics. They have bad reputation because they were very extractive in the first iteration we have seen in play to earn games, right? And I agree with that. But the answer is not about going one token, because actually it's very hard to let's say make everybody happy with just one token, because again you have different people with different expectation. So I'd say that at least two or even more tokens will be a very interesting model to see in the next iteration of Web3 games, actually.
Yeah, definitely agree on really thinking about what makes sense for your specific game. Should very much be a customized experience based on the goals that apply in that particular context. And I like two token models. I've been at the point of saying that should be widely done. It's really about what makes sense in that context. And my general recommendation is just avoid combining motivations to spend and motivations to hold in the same token, because then you get these conflicting incentives and could potentially end up failing with both of those goals.
Yeah, good point.
I'm sorry, I just want to add, I agree with this separation of these two token types. And I would add on the currency spectrum side of things that the distribution model should be reasonably equitable. Otherwise, people won't really think it's fair. And I think in order for a token to be viewed as a currency, it should be reasonably fair in how people earn it. So you shouldn't have like token sales with the currency, where you're selling off a good portion of beforehand.
הרחבה שזה לא מה שהן רוצות לאכול.
Avi, you're gonna have to mute, man. I didn't understand
Sorry.
anything from that Hebrew, but
sorry about that.
I did.
go ahead, Amino.
But yeah, anyways, yeah, that's all I want to add is the distribution of the currency should be equitable. The value accrual token can be, more along those lines of if you want to do some sort of funding round, I think. But as equitable as everything can be, reasonably at the start of an ecosystem, I think is the best way to go about it.
Yeah, and if you sell a token that's meant to be your currency, your medium of exchange, then that's going to, or as like a pre-sale, that's going to create expectations of the price of that token rising, and then that's going to directly conflict with this currency stability, because people think the price of that's going up, then they don't want to spend it. Now no one's actually spending within your economy, which can be very problematic.
Yeah, exactly. And yeah, the currency should not be a speculative token. I 100% agree with that.
Yeah, I'm going to jump in and mention that this is one of the reasons why Second Life in the first place designed their economy, Linden Dollars, as a closed virtual token, right? Because they didn't want to make it just a giant speculative venture. They wanted people to use it in the game, buy land, rent land, do stuff with it. And again, I'll throw my weight behind supporting the idea of separation of investable currencies versus utility currencies. The big thing I think people are afraid to do in their economies, because it's hard, right, is having currencies that devalue over time or decay, or have things that you buy with it possibly decay. Like that entire aspect of virtual world design is pretty hard to figure out just for balancing's sake.
Yeah, I think that it introduces the reason for like a governance token, right? I think the players have to, the value accrual has to come from the players. The players need to realize that there's value over time just by participating. So giving them access to like an underlying token that can govern the whole ecosystem, or give them access to an ecosystem, creates tremendous value to the player as to why they need to hold it, and also speaks to like the investors' motivations in terms of like a long-term hold and potentially getting access to another commodity or some other resource token, which can then be further utilized to give them access to different operation verticals within this game design. So I think the value accrual comes from like this whole big ecosystem play. But I think more importantly, like projects need to identify like what it is that they're actually building first, because I don't think every game can thrive on like a multi-token model. There's going to be some that may only operate or thrive off of like a one token model. But how can they interoperate with other like platforms out there that are building more robust economies? And perhaps this could lead to some more discussion in terms of like interoperability and collaborations of different projects.
I think in the short term, the incentives are kind of set up for there just being interoperability between games of the same studio, because there can be cannibalization risk if you're kind of opening up that interoperability from assets from another studio. It's got to be balanced against the potential user acquisition benefit.
Yeah, I just think like some projects just need to be honest about their approach and whether like what it is they're building can be like successfully like scalable and sustained with their current user acquisition plans. I just think that they'd be better off just joining up with like a Web3 publisher and going that route, and having like teams that solve sort of the economy side of things, take care of that, and then they also get to tap into some of like the user base within that Web3 publishing platform. So I don't know. I just see that as a less, maybe a better path to success in a sense.
Kiefer, do you think about interoperability when you design economies?
Yes, it's something that should be planned in, because you have to think about what at that point, like what impact do these different kind of asset creators have on each other. Like, so if you have some level of interoperability where there's different companies that can each create assets that are usable in experiences in interoperable experiences between them, then you have to be thinking about like what agreements do you have? Like if the other team suddenly sells a huge amount of assets that are usable in your world, then that might really impact your revenue figures, because maybe you were expecting to be able to sell a certain amount of your own, but this has just massively skewed the market, or massively impacted the market for, say, like cosmetic hats or something, if that's the certain type of asset that they just created a huge amount of. So you have to have some sort of economic coordination between these different entities, and if like you can handle this with agreements, but if maybe one of them breaks that agreement, is going to have a large impact, and so that is a risk that you take on here, and it also impacts UGC. So if you have UGC creators in your community, if you're adding interoperability from another metaverse, that might negatively impact the profitability of UGC, of your kind of domestic UGC creators, which might push them to go elsewhere.
I have a question regarding that interoperability, because the way I see it, there's no way like two different entities will be able to collaborate in terms of mutual economy, because it really has to come down to the bare bones of the economy. And then like unless it's the same company, I don't see it happening business wise. And if it's the same company, then they can do it on fiat money. So like I think I can't understand the opportunity in interoperability when it comes to Web3.
I have thoughts here.
I bet you guys do. Go ahead.
Yeah.
I'll let Mr. Biz go first, and then I'll go. And maybe Kiefer wants to join in.
Yeah, well, I was thinking in terms of like, so it could serve as like a standalone module, and perhaps, I guess, burning tokens and things like that might complicate things a little bit. But what if like staking mechanisms were involved, where players could cross into different experiences through staking, and that would be one way to lock in tokens while giving players access to other experiences. That's sort of what I was thinking about in terms of interoperability.
Neat. I'm going to jump in, and I'm just going to, I'm going to try not to word vomit all over this. All right. So just bear with me for a second. Brief history. I've been around since like the transition from MUDs to MMOs. So I've seen these economies start from nothing, even in their pre-alpha stages, even when I was just like a young teenager. I remember the history of this, and later joined those same teams. So I inherited their work, so I know what they were going for. So some of the original virtual economies really tried to do economics as a consequence of the ecology, the living world simulation, right? They wanted the game world to feel as alive as possible and give maximum freedom to the players. So players had like just maximized ability to interact with the world, which is extremely rare these days. We constrain that to sandbox games mostly. And the consequence of this was an idea to have the resources of the world have a certain spawn rate and a certain allocation amount. And if the players exhausted it, they had to break the items that they were made from in order to recycle it back into the original pool. And of course, it failed miserably within a couple of days of their testing. And I can use Ultima Online and as a main example of that. And so the lesson they took away from that was, well, we just have to be able to freely print money like a Fed. And that, of course, also went terribly wrong over instead of days, instead of weeks and months. So they invented many sinks and drains to pull the money back out of the economy, right? Main lesson here is that players will hoard things if there's no consequence for keeping them or storage costs, right? So when we apply this whole thing to Web3, it has interesting consequences for interoperability. How do you measure the value of one metaverse economy versus another? And I'm not just talking about like the translation of like a +5 ice sword into a laser gun game, right? I'm talking about if a player invests like 2,000 hours earning the top of the line thing in the game, can that effort, can that time and probability space be respected in another game? And so what I hear about and what I think is that NFTs and tokens like digital currencies are going to be the solution for this. And of course, as was just kind of pointed out by some of the previous speakers, no, naively that won't work, right? Because it's a combinatoric problem. One game, like Avihe said, like one game isn't going without contractual agreements isn't going to respect the IP or the items in another. However, if both games are basing their economies on some common token, right, then you have more flexibility. And exploring how that tokenization works for enforcing the resource-based system underneath, I've spoken about it before, but it's a really interesting focus for me in my company. So that's why I'm always so passionate about it, right? Because I think there are ways to do that, but you're essentially locking in people to say, hey, the players can import and export things out of the game because it's supposed to be a metaverse game, right? But that means the publisher has to invest like their own profits back into the game's economy in a provable way using some standardized tokenization scheme, which also gives you, and this is the crazy part, it also gives you something that works across horizontals, right? So for instance, if you are a fantasy metaverse game, well, it turns out that things like the open gaming license, and I'm going to pause here because it's under fire massively because Wizards of the Coast and Hasbro are having big issues with this right now, have existed, and people have built amazing shared content in the same universes thanks to having open standards for how like a role-playing game should work, right? Like what is the value of gold versus bronze versus other things, right? Those are things that could be established in big sectors, and then you can have very like universe to universe adjacent metaverse economies that talk to each other because you're all investing in the same on-chain standard, right, for development of the resources in the game. And I'll stop there because again, I'm getting a little bit preachy, soapboxy, but I think there is a path, but it requires kind of taking the lessons from those virtual world MMO games in the past and kind of applying them in a more standardized way.
So I'll just hop in and even go one step further, abstracted from, game economies and stuff and just look at a macro level. And first of all, I agree with pretty much a lot of what you said. But I like to look at things in terms of countries and how countries interoperate and do, commerce. When, like, for example, why does the United States work with China? Or why is there, economic ties between these two countries? Well, China has all this manufacturing, and then the United States has demand for these products that China's making. China is also buying all the treasury bonds from the United States, which is giving financial stimulus to the United States. And so there's a financial benefit of these two countries working together. So I think that a lot of games are trying to look at like how can we make our assets interoperate between games, but there's no reason or context for them to do so yet. Whereas it might be better to start with like a financial primitive for these two. And just like you're saying, where they're using the same token or something like that. In our game, our auction that we auction ships off at, which is the main NFT that you can play the game with, we can take any token in our auction. So in a sense, that might look like a financial stimulus to a newer ecosystem. If we say, oh, we'll take your token. So essentially, we're going to be diluting our ship holders, but it may provide financial stimulus to their token, which then brings in more players to our game, which increases economic velocity and ultimately benefits everybody in the long run. Another way might look like, for example, if like we're looking at creating treasury bonds for our DAO. So like another project might purchase treasury bonds to hold in their DAO, and then they're earning interest in our tokens, which they can then use to either reward their players with, or they can use to get ships from our auction, or et cetera, et cetera. But there's a financial benefit for these two games to work together. It's not as flashy as like you can use my ship in your game, and then you're flying around in your game with a ship in another game, but it's a way to like start working towards, I think, as this financial primitive kind of evolves into interoperability over time.
And do you feel that original, and I'll say this because I feel like Web3 had a big zeitgeist of exactly that. Do you feel like the current generation of Web3 games trying to all show themselves off with like Ether or Bitcoin SV as like their financial primitives? Do you feel that that's moving towards that, or do you feel they've squandered those chances so far because they're not really doing something that you think they should be doing?
I'm not sure I understand what you're asking.
All right. I didn't say it very well then. So when we talk about like a financial primitive, right? Let's call it like a Web3 based financial primitive, for instance, being important to two different ecosystems, right? Like two different companies, two different products, and then having value between them in an interoperable way. Do you feel that what we've seen in Web3 games right now trying to use like Ethereum or Bitcoin as financial primitives, do you feel that that's an example of that? Or do you feel like there's still something that's missing? Or
yeah, I mean, I guess like, yeah, of course, I think Ethereum is a great, I view Ethereum as like the best financial primitive there is, but I guess I'm talking in a more like narrow perspective of like games using interoperable mechanics as financial primitives, and not so much as like the broader Ethereum token. But definitely, yeah, I'm a Ethereum maxi, so I could care less about any other blockchain product. But yeah, I think Ethereum will probably be the go-to for like metaverse, Ethereum, and obviously layer 2 solutions and all the above.
Yeah, thank you for digging down on that.
Feels like we could keep talking about this. I know Avi might not be convinced yet about these answers. I do feel like there's a lot of people who will have to show to convince instead of talk to. So I guess, guys, it's up to us now to build something that proves interoperability.
That's right. We just got to build stuff, even if it's iterative. That's the only way to prove anything, is to show that it's working.
Mm-hmm.
Yeah, well, Tim, you asked how you value MMOs, and it's just like, to me, it comes down to the network effect, whoever brought product first to market, and whether they have plans on making their solution interoperable or allowing modules within their open world environment. Then I think that provides an ability for cross-pollination between users and that sort of thing. So
I love it. That's exactly what I believe too. Yep.
All right. I think that's a good one to end on. Yeah. Really enjoyed this, everyone. Hey, Maria, you're just in time for the outro. Welcome.
Cool.
Yeah.
Bye.
There you go. Bye. Thank you, everyone, for joining. This was a really fun one. Yeah, I think we're back next Friday. Hope to see every single one of you there. Hope we can. I think we need to like do some Web3 game breakdowns at some point, and I think we wanted to do Castaway. So let's see if we can do that. If you're joining us next week in PG Connect, the FOGDAO meetup, it's going to be popping. We have like almost 30 people coming, Maria.
Yeah, another 2 people plus all the other people are joining. So yeah, we're 30 exact.
That's going to be really fun. Excited for that. If you can't join, we'll still chat on Friday, and we'll give you an update about how everything went. And with that, we're out, and yeah, speak to you guys next week. Ciao.